Dipan, hi, good morning. Now you have been maintaining that really it's a stock-specific market and just focus on individual stocks. But still, a word on the market itself. Are you surprised by this kind of big fall that we are seeing in this first 2 hours of trade, or were you expecting something like this once the Fed tapering actually came?
Yeah, well, I can't deny that. Yes, I am surprised. I think we had excellent news flow over the past two trading sessions, and yet the market has not reacted as favorably as one would expect. But then I think, I'm completely heartened by what has taken place yesterday and what we came to know today. One by one, I think the major uncertainties surrounding the market are getting addressed. We had a very pragmatic and realistic RBI policy, and it's very clear now that if vegetable prices or even if fuel prices were to, move up, one shouldn't easily correlate that to higher interest rates over here. There is a small minority which feels that maybe the interest rate cycle in India is turning, and I think some more time we'll have an answer to that. More importantly, I think we have a roadmap as far as US tapering is concerned, and the fact that $10 billion tapering has in fact been confirmed. The interest rate increases will not be for at least a year or a couple of years thereafter. So I think that some uncertainty is out of the way as far as the markets are concerned, and that's indeed very positive. And although the Sensex and the Nifty are trading lower, we are seeing a lot of action in mid-cap IT, frontline IT, pharmaceutical shares, some of the select exporters. And these are the companies in which a lot of investors are invested in at present. So we are having a situation where although the markets are down, if you look at the portfolios of most investors, I think they're having a fabulous day today.
Okay, Dipan, how would you approach Infosys, which is at a lifetime high, and as well as the frontline IT stocks, especially going into earnings, which kicks off maybe maximum second week Jan?
See, I've always maintained that this tapering is going to benefit the IT companies in India, and the reason is that the tapering in US will take place only when the US economy is on a strong footing, and that is the clear beneficiary of that is the Indian IT companies. Secondly, whenever the tapering does take place, it will have pressure on Indian rupee, so Indian rupee may depreciate further, and that also is positive for Indian IT companies. So all along for the past several months, we've been maintaining an overweight stand on Indian IT, whether be it large cap or mid cap. And my sense is that the December quarter also will turn out to be quite decent for the sector as a whole. Infosys in particular, I think, is getting benefited from re-rating of its price earning multiple as uncertainties surrounding top management changes is getting addressed. And at the ground level, we do feel that the company is making progress as far as winning new deals is concerned. And on the whole, I think it seems to have got its rhythm back. 2 quarters have gone pretty decent for the company as a whole. And if this time the quarter also turns out to be better than what Street is expecting, then we're getting into a trend where Infosys, instead of underperforming the industry and giving disappointing results, would be in a situation where it is outperforming or in line with industry growth rates, and on the whole back onto its old growth path. So I think that on the whole positive on Indian IT companies, and I think some of the laggards, especially Infosys, mid-cap IT, others are playing catch up to what TCS and HCL Tech have been delivering over the past year or so.
Dipan, would you use today's fall in private sector banks to buy, or would you wait for a bit?
See, I think that interest rates remain elevated in India, and there is no real trigger for the banking sector to move up or for that matter do better in the coming 2-3 quarters or so. Private sector banks, they are in a secular growth momentum at this point of time. Despite a very tough September quarter, they came out with good set of numbers, and my sense is December quarter also will be pretty decent for the sector as a whole. But investors are more or less overweight or equal weight in the sector as a whole, and one shouldn't expect outperformance from the private sector banks. So maybe if you are slightly underweight in private sector banks, then this may be a good opportunity to get equal weight. But if already investors have a decent amount of exposure to private sector banks, then they shouldn't be getting aggressive and increasing their exposure. As I said, the best way to play the market is through the export oriented businesses, and the focus should be on IT, should be on pharma, should be on select exporters, maybe auto ancillaries who are exporting, or for that matter textiles, companies which benefit from rupee depreciation. rather than focusing on domestic oriented businesses where the challenges are still pretty strong.
How would you then approach pharmaceuticals and all of the news that has been doing the rounds in the past couple of days? Anything you like, for example, Aurobindo Pharmaceuticals, Orchid?
Yeah, we've been positive on the pharma industry for several months, and the reason for that is that I think the export markets, especially the US markets, have picked up significantly for most pharmaceutical companies. The only downside risk, of course, is US FDA action, and that's very difficult to call. So in terms of strategy, the best way to play the pharma companies is to go for large pharma companies which have got well diversified operations, diversified manufacturing locations, and have a fantastic track record as far as US FDA inspections are concerned. So in line with that, I think the likes of Sun Pharma, Dr. Reddy, Lupin come to mind. And then the mid-cap pharma companies also, they have certain value in them. But then the risk profile is pretty much high because they may or may not get adequate approvals to sell drugs in the US market or other export markets, and they could get hit by one or more of their plants being impacted by US FDA action. So the mid-cap pharma companies can best be invested in as a kind of a complete basket of stocks, and you buy 4 or 5 mid-cap pharma companies, and I think that also will outperform the overall market. So it's another sector where investors can be overweight in, and rupee depreciation will benefit. At the same time, I think when we are talking about rupee depreciation, one needs to keep in mind that although we had a lot of the benefits coming through in the September quarter, because of the earlier hedges which companies had taken, the full benefit of the rupee depreciation did not flow through. And my sense is that December quarter and March quarter, we will see the full impact of the massive devaluation of the Indian rupee, which we saw in the year 2013.
Finally, Dipan, just a couple of stocks, and would you use the weakness to buy L&T and BHEL?
See, I'm inclined to look at both of these stocks positively, but as I said, the focus is more on the export-oriented companies over there and trying to look at new ideas coming out from there. Both companies, L&T and BHEL, are great long-term buys and great companies as well, and still available at decent valuation. And between the two, one would prefer L&T, which again is focusing on export markets, trying to take advantage of rupee depreciation, expanding its Middle East business, and that's very positive because it takes care of its capacities in domestically. And as and when the capex cycle picks up over here in India, they will also be the first beneficiaries of that particular momentum. So I would say positively inclined for both companies, maybe market performers or outperformers. And between the two, the preference has to be for L&T, which has got a strong export franchise as well.
All right, Dipan, thanks very much for joining in. So that's the view coming in on the markets. To